to another session. This is week 31, the 30th of July 2024. New York trading session, live trading sessions. As usual, we are going to go through a code first before we delve deep into markets breakdown and looking at the fundamentals as well. Today's quote is: there is no magic pill to achieve profitable trading. Gaining edge will require journaling, reviewing your data. Something has to change for something to change. There's no way I can further explain this. I would say maybe the problem is that people think that there's this mythical strategy, holy grail, that has a 90% win rate, 100% win rate, as we see on YouTube channels. There's no such thing. I'll tell you the truth. I've been in the back end of so many brokers. I've seen the data. Sometimes the best traders have a win rate that is between 35% to 60%. The best traders making a lot of money. This 100% win rate things, I don't know where they're coming from. You should ask yourself, what is the intention behind this? Most of the time, they want to sell you courses and all of that. That's not to say I do not sell a course. Well, I do not sell a course, yes. Rather, I engage you guys in a program step by step that will take you from novice to pro. There's science to the teaching that is, that takes place there. So yeah, there's no holy grail, ladies and gentlemen. Also, I would say if you had to stick with one strategy for 12 months, you'd actually learn a lot. Probably that would be the best strategy. It doesn't necessarily have to be the one that I'm trading. Just stick to one thing for 12 months, journal and review your data. You will know, you'll be able to derive some key insights and then make necessary adjustment to your strategy until you find the right thing. There's nothing different that we profitable traders that we did. It's just that we failed again, failed better until we get to where we are. It doesn't mean we do not take losses. I still take losses. Even till this day, I still take losses. I accept them because they're calculated. I know how much I stand to lose at a particular area. All right, let's look at trading economics now, more on the macroeconomic economic news. So we have the Euro GDP growth rate that BIT estimates. So the Euro, we must be anticipating the Euro to do well. German inflation rate unexpectedly rises. It'd be interesting to see how this impacts the German 30. S&P and NASDAQ futures rise. Dow Jones is flat. We're going to look at the Dow Jones as recommended by one of you guys. Mexico GDP grows less than expected. Mexican GDP expanded by 0.2 from previous quarter in 3 months. Mexican peso must be doing well. Probably not so well against the US dollar. Turkish economic morale falls to 11-month low. Spain inflation rate below forecast at 2.8. So some mixed views on the European markets. Sweden consumer sentiment climbs to 2.5-year high. But this highlight here, Euro GDP expanded 0.3% on Q2, the same as in Q1, and above forecast of 0.2 preliminary estimates showed. France, Italy, and Spain grew while German economy contracted by 0.1%. You see, it's just mixed feelings here. But let's look at economic news that are scheduled this week. We're going to look at today being a Tuesday. So we had the preliminary CPI inflation news that came out same level as the forecast, but higher than the previous value, which means it is increased, right? Spanish inflation dropped to 2.8%. More news coming out later in about an hour on the US dollar, consumer confidence, USD job jobs, consumer confidence. How confident are is the local population on locally produced products, and that normally says a lot about the country. And if people are not happy with products produced in the country, or even the economy of the country, they're going to apply their trade elsewhere, or even put their investment in other countries, or safe haven currencies like assets like gold. Hence, you normally see gold going up when there's wars or any political instability. Right. Let's jump onto the market. We're going to go through our watch list as shown there. Let's look at the dollar index, which basically measures the strength and the weakness of the US dollar. I mean, by the look of things here, we are approaching the level we've been anticipating since last week, right? I think we have the same thing happening on Northwest Texas oil, not silver, on gold. But here, you see, if the rule of correlation says if the DXY is, how was it behaving? If the DXY is behaving like this, might be coming back to this area of, I'm gonna draw it like this area of supply, we should anticipate gold to do the opposite. So we should anticipate gold to maybe go up there. Nice. Some not so neat, but I hope you'll get what I'm trying to demonstrate here. Let's do this. There we go. So if the dollar index, and remember which of these assets is leading, the dollar index. If the dollar index is sitting, sorry, it's supposed to be opposite. I'm supposed to be drawing on demand here. Right. So I think let me annotate this. So this is gonna be gold. Gold. And this is gonna be DXY. So the dollar index, if the dollar index is sitting at a supply level, you must expect gold to be sitting at a demand level, okay? So that is negative correlation. That is negative correlation. I try to remove this drawings. I hope that makes sense, ladies and gents. That's a lesson on correlations. It's very important. You can use it to time the market. Just wait for the dollar index to get to a supply or demand, and then you can go trade gold. You can go trade USDJPY, which is all the correlated pairs. That would mean we can expect gold to start here at the demand level and then push further. It's coming here or further up there. I'm just going to leave this here. If we would have to trade this from this level, let's see how much would this trade the potential. 1:8.5. That is a good return. You risk 1%, you get 8.5% return. That's a good one. Yeah, more than the 1:5 that we normally look for. Let's look at USDCHF. USDCHF, Kutala had some requests. We are going to go through those as well. USDCHF, it is positively correlated to gold. This is last week's analysis. I wouldn't change a thing because if SMC wise, you can tell that we broke this low, break of structure, right? Came back here, but we didn't come really to the area that was responsible for breaking of structure. Market continued breaking structure downwards. So we'd anticipate the market to come back there. A nice potential 1:5 or 1:6. Sorry, 1:5 or 1:6. Somewhere there if we're targeting these lows. Some nice setups, day trading setups. that you guys can take. Let's look at GBP CHF. There's an opportunity here. GBP CHF. GBP CHF. Oh, what is that? GBP. There we go. All right. Let us remove the drawings and start afresh. Start afresh here. We're gonna start on a monthly as usual. Look at where the market is going on a monthly. On a monthly time frame, we are in some sort of indecision, dodgy, as you can see. But it's gray, so we might as well say we're bearish, because looking at how far the market went up during the month and now it's coming back to the opening price, that is a sign that we have strong sellers. I'm sorry about that. Yeah, these things happen. These things happen. So I pressed the wrong button. Trading view. Hope you guys are able to use this app. It's a very nice app to analyze. However, I like to analyze on MT4, because that's where I'm gonna trade at the end of the day. So let's look at one. Let's look at. I hope you guys can still see my screen. Give me a thumbs up if you can still see trading. So we're bearish on it. Oh, fantastic. We're bearish on a weekly as well. Let us see on a daily. We are bearish as well. So I'm looking for selling opportunities here. That's what this market is telling me, right? The reason we look at the monthly, weekly, and daily is to find direction of the market. You know what they say, follow the trend, right? So with that said, I'm gonna take it to the weekly a bit here. With that said, there's an area I'm interested in, 1.150, this area here. So I would like to see the market coming up here before it can drop further to the downside. However, there is something that I'm also seeing from yesterday. So counter trend traders that are looking for short-term movements up, they can look for a buying opportunity here. I don't like that because the main trend is going down. So why that area, Max? It's, well, for me, it's this big player here. Check this big player here. So this is an area you can anticipate to buy from. However, I do not like it. For those that are part of the premium course, they'll understand this is what we call fair value. This is where everyone is happy trading. This is a ranging market. And for those that trade SMC, there's lots of sell-side liquidity here. So buying from this point wouldn't be ideal. However, there are those people who catch such trends. However, for me, I'm really happy for the market to come back up here. It is a nice supply area. I'm happy waiting for the market to come up there. Maybe let's remove this to avoid confusion. And then the question becomes, Maxwell, will we even have time to wait for the market to go? Yes, personally, this is how I trade. I'm very patient. As I've alluded to earlier on, I didn't have any trade last week. I was just waiting. But this week, the market is now tapping into my areas of interest. So if we take that as a 1:9, nice risk reward ratio. I think the chart is even clear and clean this way. You do not have to be drawing so many lines. Not that I'm dissing anyone, but you get to the point where what we call analysis paralysis. This is where you have different elements on the chart giving you different interpretations of price, and you then get scared of executing because you don't know which one is which, and the precedence in the sense, is it supply and demand before a trend line? Is it a trend line before a harmonic wave? It gets confusing. Hence, I follow a very simple strategy. Supply and demand works for me. I hope that question was answered for Tala when she asked why that so. As some big player that I saw, but it was on a short term. I always prefer going with the long-term trend, the monthly. Absolutely. I think even from last week, we still see the same thing here. I wouldn't like to move this. I think there's a question. Kutara says yes, thanks. And if you don't really understand, please make sure you ask. So with this one, you can get a nice 1:12 with Nasdaq. Um, Imagine risking 1,000 rands, you can walk away with 12,000 rands. But the problem, not really a problem. Um, I'd say the problem with people, rather, is they are not willing to wait. They're not willing to wait. So what happens when you are not willing to wait for the right market or to execute at the right area? You're going to lose your money here. So you're losing 300, 500, 700, until your 5,000 is finished. By the time the market gets to the nice area, and you'll be there seeing it, now you can't take advantage of it because you do not have money. Even if you do take advantage, you'd find that you're risking now, let's say 150 to make, let's say 850 instead of the 12,000. Do you get what I mean? That's the thing about patience, right? If you're not patient, the market will play out according to your analysis. It's just that by the time it happens, you won't have enough money to take of it. You're absolutely right, Kumo, when you say, I'm in Kutara, when you say FOMO, the fear of missing out. Hence, some people will be like, you know what, let me take a buy here while it's going up and grow my account, and then I'll go full margin. Never go full margin, by the way. You're going to, Forex trading can turn you into the most prayerful Christian you've ever seen. I've prayed so many prayers, like, God, um, if you just let this one come back in my direction, I'll never trade like that again. Sometimes it will happen that the market will now move in my direction, but I'll repeat it. So I don't want to find you guys on your knees crying, begging the markets. Just be patient. The way I trade now, it's so peaceful. My heart rate is at the right level. It's the best the best that I've traded in years. The funny thing is I started with supply and demand, but then as you start trading, you normally, as you go on with your trading, you normally meet some people who are going to obviously share different strategies, and some of these people are driving Lamborghinis, and it's very easy to be hooked in a sense. Let's look at US oil, or West Texas oil, oil WTI. I'm expecting it to come back to 73.5, somewhere here, and then push further up. And I just want to teach you on correlations once again. This and USDCAD move in the opposite direction in this sense. Or why, rather, let me give you the background. Canada is the second largest supplier of crude oil to the rest of the world after the Middle East, right? So which means when oil moves, the Canadian dollar is going to respond because the Canadian dollar is strongly dependent on crude oil. So why does it move the opposite direction to, why does USD CAD move the opposite direction to US oil? It is because the Canadian dollar, which moves in the same direction with oil, it is a code currency, not a base currency or a primary currency. You're going to get these things as time goes on. So this is what I'm expecting for the week. And I always like to, like I think I've said this so many times, I always like to have the broader picture of things. So you can tell me this is happening on a short term and that is happening. Okay. I'm just gonna wait for the higher time frame to play out. You remember this setup we had last week? Guys, we're good with this. You see how it played out? Let's see how much risk reward ratio was here. There's a friend who was on the chat, I think, last week. He's not here to give us a testimonial. The 1:6.5 was very nice here. It is patience, patience. If we look at this here, let me see how long this took. So from the 25th to the 29th, 4 days. I willing to hold the trade for 4 days. That's the question. So what other new opportunity do we have here on BTC? You see, supply and demand. You do not have to crack your head with this thing. Oh, okay. Went to 1 minute. Supposed to be 1 hour. There we go. This thing, it just moves in steps. Step down to 30 minutes because I don't see what I'm looking for. I'm looking for a clear area of demand. We have 10 minutes. I think we'll start attending to Kutala's questions. So it's coming down here. Also, why am I waiting for a buy here for this to push higher? I'm waiting for a buy because I can't sell right now. Everyone is selling. Let's use logic, ladies and gentlemen. If everyone is selling and you also sell, who are you selling to? You need to see some sellers coming in for you to buy. You need to see some buyers coming in for you to sell. It is that simple. So let us look at GBP AUD as requested by Kutala. Why is my chart showing this? Oh, there we go. Let's check on a monthly. I'm gonna remove the drawings so that we start afresh. We're bullish on a monthly. Let's see how we're doing on a weekly. See, dodgy indecision, but I'm gonna go with the monthly time frame direction for analysis sake. To me, it is stuck in a consolidation area. It is really stuck in a consolidation area. Let us see lower time frames. Going to the lower time frames, I would want to take a setup that is in agreement with the higher time frame. So I would want, you see this big player here, I would want to see it come here. For those that trade SMC, you need to see a liquidity grab, right? So there's liquidity there. So I would need to see it coming down here. And then I'll buy. Target, I can target these highs or those extreme highs. So let's see, potential here. I'm trying not to add too many things so that I give you the broader picture, the bigger idea. Targeting those highs, you get yourself a 1:10. But for me, a 1:7 is also fine. There we go. Remember, stop losses above your region. So let's wait for it to tap here, and then we're going to look for more buying opportunities. Let me see what else she asked for. USD JPY. Is the GA making sense though? And then moves your direction. It is just a matter of you understanding where did the big buyer or the big seller come in, right? You see, sometimes you see how the price lives is on almost in a straight area. Once price lives like this, then there's not a big player involved. What is this? Fair value. We do not trade this. For those that trade patterns, this is a flag, so they're expecting selling opportunities here. Yes, we want to see retail traders selling for us institutional traders to buy. You know, someone once asked, why aren't the bank traders coming in to expose retail traders? It's because they need retail traders on the other side of their trade. I'm sorry to say, but it is the truth. It's either you hate the player or you learn to play the game as well. So they need to see retail traders on the other side of their trade. So let's look at dollar against the Japanese yen. Let me remove drawings here to avoid confusion. Let's go on a monthly. We've got less than 5 minutes to go through this. Our sessions are always 45 minutes. So we're bearish, probably bullish on a weekly, bearish on a monthly, bullish on a weekly, exactly, and sort of bearish on a daily. Let's see. That's bullish as well. So with USD there's a couple of areas that I'll be looking at. So this one and this one right here. For now, I'll focus on the one that is closer to current market price, which is 156. Why? Because this broke the structure right here, as you can see, break of structure on the left, and then we had that big imbalance. Remember when I said, also notice how price leaves the area. Why am I not considering this? Is because you see how price left the area. It was more consolidating, but here, boom, boom, clear. So yeah, and it looks so nice. There we go. That's a nice area of supply there. So why there? We need to see buyers coming in first for us to sell, right? If you have enough money, millions, you can sell with one standard lot here. Obviously, you can stomach the drawdown, but if you have a $100 account, it's gonna be tough. It's gonna be tough. Also, Kutala, please message me on WhatsApp. I want to know if you're able to make deposits. Last time I heard you wanted to make a deposit into your trading account. So yeah, look at how the market left the area. You see, very sharp. Go to my Instagram and see my befores and afters. You'll see the kind of areas I look for, right? Sharp movement down. You look at this, boom. I didn't pick this area because this is where retail traders are happy trading. Okay, less than 3 minutes. You're welcome. You're welcome, Kutala. So yeah, targeting these lows here, we can get a nice 1:9 or 1:8. Very nice. If you're risking 2%, imagine you risk 2%, you walk away with 16%. You see, you do not need to trade every day. What you really need, if we're being honest, it is a healthy account balance. It's a healthy account balance, because imagine you're risking 1% of 100,000, which is 1,000. 1,000 rands maybe, or 1,000 US dollars for to accommodate people from different parts of the world. 1% of 100,000 US dollars is $1,000. You risk $1,000 from one trade, possibly make 16,000 as a return. Let us say you lost 4 other trades. You won one trade, it gives you 16,000, and you lost the other 4. You're still walking away with 12,000 US dollars. So this is how I look at the market in terms of risk management. I don't care about the losses. They're part of the game. And also, I do not control the market to the point where I would worry about the losses. So I control what I can control, which is my risk management and putting time in terms of identifying these potential areas of the market turning. Supply and demand, nothing complicated. Bootcamp, yes, the bootcamp is still happening, ladies and gentlemen. For the bootcamp, all you have to do is fund a minimum of $200. I'm going to share a link with a broker that you can deposit your funds with. The idea of the bootcamp is to help you see the markets better and help you understand the rhythm of the market, which is understanding price action, and also understand what is happening behind the scenes in terms of the exchange between buyers and sellers. Trust me, it will simplify your life. It will definitely simplify.